Alright, guys, so Russia just issued a very deadly ultimatum. It's the final warning to the West not to cross the line, not to cross the financial Rubicon. But just like the 61 billion to Ukraine, there's a big risk of the unthinkable happening. Lawmakers in the US they have approved the aid to Ukraine. More money is coming to fight the Russians, and the breakdown is really wow. 61 billion for Ukraine and to replenish US weapon stockpiles. In other words, helping to grow the military industrial complex. A ton of money is heading to the US defense industry. 26 billion is heading to Israel, 4 billion of which is to replenish their missile defense systems. And of course, 8 billion is earmarked for the Indo-Pacific, specifically to counter China. A lot of money is once again used to replenish the weapon stockpiles. It doesn't take a genius to see who's really benefiting from this bill. It's the exact industry Eisenhower was warning about. But what made Russia angry was a provision within the bill that allowed Ukraine to use funds from the frozen assets. We are on the brink of a massive confiscation spree between Russia and the West. In response, a top Russian lawmaker is urging the Kremlin to confiscate Western assets, to take a preemptive strike before the frozen reserves gets taken away. Moscow has also given an ultimatum to Europe. If you take our assets, we have a response that will hurt. If the EU moves ahead, they will lose more than Russia, and we must realize that this isn't an empty threat. Putin has seized Western companies before on Russian soil. The most recent was the seizure of farmland from a US controlled company. They took around 600,000 acres of land back to the state away from private investors. Now, there are two courses of action they could pursue. The first is seizing Western companies and any physical assets on Russian soil. That's the most direct way. The second is legal action against the US itself. And the goal, of course, is to cause an international scene to remind the world of US overreach. Kremlin vows legal action against the US bill on seizing Russian assets. The trial will be very complex, it will be very messy, but it could cause severe damage to US economic interests if the bill passes. If we dig under the surface a little, it's clear what Russia's agenda is. It's not just a simple tit for tat confiscation. It's about trying to break the dollar system by telling the world that counterparty risk in the West is real. According to Peskov, if the bill passes, many investors will think 10 times before making any investments in the American economy or storing their assets there. It's the legal front that could potentially cause the most damage. Russia's going to hammer this gong wherever they go, in their meetings with the Chinese, all the way to Africa, and during their trips to the Middle East. Confiscating the Russian assets will provide Putin with a new rallying cry. He will push for de-dollarization everywhere he goes, especially in the upcoming BRICS summit in October, and that summit will be held in Russia itself. Now, it's important to note there are many voices in the West pushing back against the confiscation. The head of the ECB, Christine Lagarde, is warning against this, that the plan to use the Russian assets carries a ton of legal risks. She knows the song and dance the US is doing, and if this passes, it could undermine the integrity of the Western financial system. Moving from freezing the assets to confiscating them to disposing of them is something that needs to be looked at very carefully. It could entail breaking the international order that you want to protect. It's a simple domino effect. The majority of Russian money is trapped in Europe, and if the confiscation happens, Europe will be affected the most. The US will be insulated from the worst effects because they still hold the reserve currency. And just like how the war screwed Europe over when it came to energy supply, this confiscation will hurt the Eurozone more. The warning is coming from the ECB itself. You're talking about 6 billion in the US and 260 billion in the Eurozone, and that puts the partners in a slightly different position. In other words, Europe will be screwed worse than the US. Now, Lagarde also admits that the dollar gives the US a powerful shield compared to Europe. America can always hide behind the US dollar. I think the issue of international currency is also asymmetric in some ways, and that needs to be taken into account. So if a confiscation happens, the euro will be damaged much more than the dollar. The biggest threat to the West isn't really Putin's counter seizure. Yes, there's around $200 billion trapped in Moscow somewhere, but the destruction of trust will hurt even more. And let's focus on the bond market. To fight the Russians, Europe and the US will be spending a lot of money. And where's that money going to come from? It will be borrowed into existence. Global bonds are falling on waning demand for havens and sales deluge. The US is going to sell over 180 billion in treasury bonds. Germany and the EU are also issuing a ton of debt as well. The West is borrowing so much that investors just can't keep up, and this is starting to push up bond yields across the board. Borrowing costs are flying to the moon. Since December last year, bond yields in Germany and the US have been rising. The US 10-year has gone from 3.8% to 4.6%. The German bond has also risen by over 50 basis points as well. And all these are big moves that make borrowing extremely expensive. It makes the US debt crisis even worse. It could force Europe to break their own borrowing limits as well. And just imagine if the confiscation happened. Money, especially from the global south, will be hesitant to buy Western bonds. The seizure will remind the world of counterparty risk, and this will keep borrowing costs higher in the years to come. It's really counterproductive. If I put myself in Europe's shoes, if I was the West, taking $300 billion today to sacrifice my bond market isn't worth it. Why would I hurt my future capacity to borrow 1 trillion, 5 trillion, or $10 trillion down the road? And let's not forget the rearmament race as well. To counter China and Russia, the G7 is looking at $10 trillion of spending over the next decade. That is a lot of money to be borrowed. Trying to confiscate Russia's assets today will make the cost of raising capital more painful tomorrow. And this is the true ultimatum Russia is giving. It goes beyond just seizing the Western assets, it's more about breaking off the bond markets. But as scary as that sounds, it's nothing compared to the economic war between the US and China. Russia is just the appetizer. A bigger storm is coming. Now, over the past few months, the US and the EU they've been confronting Beijing. And the main gripe they have is China's overcapacity. How China is flooding the world, the global economy with cheap exports like EVs. And this one chart shows it all. Between Europe and China, Chinese exports of cars are catching up fast. In just 3 years, China's exports have gone from $2 billion to nearly 20 billion. It's an exponential increase. Conversely, Europe's car exports are starting to fall, and it won't be long before China takes the lead, most likely in 2024. It's important to understand the economic war between the US and China. China has pledged to grow their manufacturing. The shift from real estate to industries is working. In renewable industries, they are leading the world. Beijing has poured nearly $700 billion here. They are world leaders, and this allows them to churn out high tech products that cost less without compromising on quality. This is key. Even the US and the Eurozone combined, they fall short of the Chinese investment. And this is why the West is afraid. They have lost the industrial base of the future. The gap today is simply too big to fill. And that's why they are moving to contain China. That's why they are moving towards containment. That's the main strategy. The US is trying to shut down China's industrial growth, and the only avenue they have is to cut Beijing away from consumer markets, starve them out, make it difficult or impossible for China to access big consumer bases like the US and the EU. Now, a great example of this is Mexico pushing away China's biggest EV maker, BYD. From Reuters, Mexico's federal government is keeping Chinese automakers away thanks to pressure from the US. Incentives given to other EV companies, including low cost land and tax cuts, won't apply to Chinese companies. The US doesn't want China to manufacture low cost EVs in Mexico and then sell their vehicles in the US without tariffs. In other words, Biden doesn't want US companies to compete with China's industry. I think it's getting rather obvious now. And the repercussions are big. Free trade is over, guys. It's all about bloc politics now. China's exports are going to face a big Western wall of restrictions. Exporting goods to the West is going to get quite difficult. Beijing isn't stupid and they know this, and that's why China's hitting back, condemning the US overcapacity claim just before Blinken's visit. It's very rare for the Chinese to do such a thing. They are very famous for just hanging back and seeing how things go. But this preemptive statement is very important. It's a declaration that China isn't blind. They say that the US has a malicious intention of curbing and suppressing China's industrial development, its economic coercion and bullying. And as you'll see, Beijing is taking steps to counter the West. The real battle between China and the US is economic. It's all about sanctions and trade restrictions. And this brings us to China's stimulus plan. Now, if sanctions are coming and exporting to the West gets difficult, there's only one solution left, and that's building up your domestic market. China has revealed more details about their stimulus plan, and this revolves around trading in their old cars and appliances. The plan here is to boost domestic consumption in China. Remember President Xi's objective 5% growth for China this year in 2024. Now, Q1 came in at 5.3%, but to sustain this momentum, Beijing just can't rely on exports. Global consumption is slowing down, and the West is targeting Chinese EVs. To survive, China has to build up their own domestic consumption base. And to do that, Beijing is planning a big stimulus push. It's really massive. This is essentially a trade-in subsidy program. The government will give subsidies to people swapping their old cars, appliances, and equipment. And this applies to companies looking to upgrade their machines as well. And in total, Goldman expects this to generate at least $110 billion of new demand. And the biggest winner would be the Chinese EV industry. It's not just about blindly throwing money at people. It's very different from the US stimulus checks 4 years back. And we kinda know a ton of those were spent on junk like luxury bags. Beijing doesn't really want to do that. They are focusing this stimulus on the industries that matter to them, the future drivers of the Chinese economy. They want to get people spending in the right industries. Now, this is a very useful chart. We can see China's economy is being driven by industrial production. It's growing above the previous trend, but retail sales are lagging behind. And a big part of that is the wealth effect from the property collapse. Because property prices are crashing, people are rather cautious with their spending. And this is what the stimulus program is all about. Beijing wants to boost retail sales to drive consumption higher for Chinese industries. They want local Chinese money to grow China itself, to grow their EV and smartphone companies further. It's basically capital reallocation on a massive scale, and the trade-in program is the trigger for it. Stop buying Western products and start buying Chinese technology instead. Now, will this work? We have to wait and see. It depends on how much the government is willing to subsidize at the end of the day. Goldman expects this will grow China's GDP by at least 0.6%. It's a huge increase considering the size of the economy, the majority of which will come from households spending on cars. So we are seeing the early rumblings of the shift towards domestic consumption. If the West continues to hammer Chinese exports, this is the only option left. The only option left is to go domestic. This helps them meet their GDP goals, sanction-proof themselves, and grow their industries all at the same time. And this is a consequence of all the decoupling talk going down, all the decoupling, the de-risking manifesting in real time. It's really important to understand who's the biggest loser here. The government subsidies will apply to Chinese products, obviously. For example, EV subsidies will be for brands like BYD. And as more Chinese people buy local cars, this will hurt Western exports to Beijing. It's simple cause and effect. Germany's big automakers depend on China to survive. They sell a third of their cars into the Chinese market. Brands like Volkswagen and Mercedes-Benz rely on Chinese money to stay afloat. If the West keeps hammering Chinese exports, China could very well subsidize their domestic market further and squeeze away Western brands. And the biggest loser here will be Germany. And if they lose the Chinese consumer, the only avenues left will be Europe and the US. Now, granted, those markets are big, but they won't be growing as fast as China. So this trade war is going to hurt everyone. And here's the kicker, China exports only a small share of their car production. Only 16% of their production is sent abroad. Conversely, Germany exports 3/4 of their production to the world. And if pushed to a corner, China's domestic consumption can cover its industrial base. But for exporters like Germany, they have to rely on the world to buy their products. And if a third of their market vanishes, it will end badly. We are talking about a massive drop in profits and, of course, terrible job losses around. Going after China and Russia won't end very well. The global economy is just too complex. Confiscating the frozen assets will backfire on the Western financial system. Restricting Chinese trade will boomerang back on Western exports as well. So you can kind of see how things are getting worse. It's not getting worse every year, every month, or even every week. It's getting worse every single day. This economic war is going to escalate even further. But let me know what you think. Will the West seize the frozen assets? And will China's stimulus plan really work? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.